You're listening to the Homeownership podcast by Movementum Realty, real estate talk for buying, selling, and owning property.
Hey guys, Sean Patrick Maloney here, broker owner of Movementum Realty, located in Hanover, Massachusetts. Welcome to episode 16, Home Buyers Frequently Asked Questions. I'm your host, Sean Patrick Maloney. Thanks for joining me this week. We get a lot of questions asked to us, but here's some of the most common questions we get. I'm going to do a rundown of the questions, give you a little information about each question, just to help you better understand the home buying process. So one of the most arguable ones is, what's the first step to buying a home? Some people say get a pre-approval, some people say find a real estate agent. I say find a real estate agent that you trust and you can work with. The reason being is that if you're working with a good real estate agent, they're going to have a lot of good contacts in the mortgage world. We do fall under a law called RESPA, where we can't just give you one, we need to give you at least 3 different agents. But the good news to you is when we're working for you as a real estate agent, it's in our best interest as a fiduciary for you to give you good advice on a home mortgage. Not just because it's easier to do it that way, but because we're finding you a better mortgage professional. And a lot of people don't truly understand that the word mortgage professional is not used interchangeably with lender or mortgage broker. Those are different types. So we won't get into all that, but just think when you have a good mortgage professional, you're going to do well. So finding a real estate agent that can connect you with that mortgage professional is going to be step 1. Step 2 is getting that mortgage professional. Now that you have a good real estate agent on board and you're working with someone that you trust and can help you with the whole process of finding one, it's a good time to find that mortgage professional and get a pre-approval. The pre-approval is going to be something that's really important at this part of the process because before you go shopping, it's really important to know how much you can afford. The worst thing going is when you're looking at houses and you realize you have a lesser budget. A lesser budget can really make it difficult. Anywhere between 10 and 50 grand less can mean the difference between having a master bedroom and not, or having a pool and not, other things like that. Or shopping in an undervalue can lead to a lot of showings that are going nowhere because you're not finding what you want, only to find out you could have been looking at more expensive homes. So just make sure, step 1, you meet the agent, step 2, you meet the mortgage professional, and you get that pre-approval. Now you're ready to really get buying. The next question you have to ask yourself is, how much do I really need for a down payment? The down payment needs, that's going to be done during the pre-approval process, but I put it here because a lot of people think if I don't have 20% down, I can't buy a house. Well, you're wrong. The thing that can happen now is anywhere between 0% and 20% or above down can get you approved for different style loans. A 0% loan is a VA loan. That one there is for veterans. That one there is the least amount of money down. It typically isn't available for the regular civilian. It's really only military people. The next one up from there is 3.5% down. That's going to be your FHAs and your conventional loans. So a lot of different options for that one there. A lot of people think that it has to be government-backed only FHA, but there really are conventional loans there. But understanding how much you have for your down payment is a big part of the pre-approval step. So one thing you got to think about when you're getting a pre-approval and you're thinking about your down payment is that you're going to have closing costs and prepaids. So the closing costs and prepaids are the other money that's going to be needed at the time of closing. So you want to make sure your down payment plus your closing costs equal the amount of money you have, not just a down payment, but that you have more than that, you have the other side. If you have less than 20% down, chances are you're going to end up with PMI. PMI is private mortgage insurance. This is one of the next most frequently asked questions. Private mortgage insurance is so that if the bank loses out because you don't end up paying your note, it pays the difference in between. That's typically less than 20% down. The prices vary all over the place. It depends on how much you're actually lending, how good of a lend you are, what area you're in, what program you're using. So there's no way of saying a rough number for PMI. You really have to talk to the mortgage professional to get that. Next most commonly asked question would be, how quickly can I close? So this one varies again depending on the situation, depending on the house. The most generalization would be 30 to 45 days, maybe as many as 60. If you're using cash, you could do it probably as quick as 15 days. Depends on what's going on with the situation. The title search is something that you'll never get around whether you're using cash or not. It's always important that you hire a title professional to do research on the title and make sure that it's clean and doesn't have any defects. Make sure that the town has no liens or holds on the property, as well as any other liens or holds, betterments or easements on the property. always making sure that you're safe to buy the property. When you're on cash, it's actually more important than ever to make sure of this, because once you transfer that cash over for that title, the title is yours. So if you buy a property with a dirty title because you didn't do your due diligence, then it's on you. So quicker you close is not a big deal, but just making sure you do your due diligence is a big deal. Whenever you're going to be doing this is another question for the mortgage professional, because it's really about how quick can they perform. At the end of the day, as a real estate agent, I can show you the house right away, and if it was legal, I could just exchange a check and hand you a title and we'd move on. But the reality is they're the ones that are going to need the time between the mortgage professional and the attorney. They're the ones that are actually going to be doing the research and everything to make sure that that property is clean for you, and also to make sure that you qualify for the loan. One of the next most common questions would be, should you get a home inspection? This one here puts us in a murky gray area, because at the end of the day, as a real estate agent, I'm not a home inspector, and I can't give you home inspection advice. I can't tell you anything about whether you should or shouldn't do a home inspection. So the reality is you should always do a home inspection, because at the end of the day, if there's something wrong with the property, you have no one to blame but yourself if you're not doing a home inspection. If you decide to not do a home inspection, I would say at minimum you would like to have somebody, whether you're a friend or family or not a friend or family and it's a hired contractor, but somebody that really knows what they're doing, come and look at the entire property to make sure that everything there is good. And remember that just because they take a quick look doesn't mean they did an in-depth look like a home inspection. A lot of home inspections last anywhere from 2 to 4 hours, digging through everything and touching every button. So if you're going to do it without a home inspection, maybe set up a private showing. That way they can look at the condition of the roof, the electricity, the heating, the air conditioning, the appliances, the plumbing, all the different working features of the home. Do remember, too, one of the other ones that comes up all the time is, well, I'm buying a new home. Why should I get a home inspection? Well, a new home, old home, doesn't matter. It's only as good as the builder that built it. And it's only as good as if they didn't cut corners. So we've seen houses that are hundreds of years old go through a home inspection flawlessly. We've seen houses less than a year old go through with issues. And we've seen the reverse as well. So it's impossible to ever tell just because of a home's age or because of a home quality visually that it's okay. So I would say I would always have a home inspection. The other thing that's good about a home inspection is it can be a time to renegotiate the price or to get away from the home if it's not able to be negotiated. So by having the home inspection, something big comes up, you may actually have a time where you reach out to the seller and you decide that you want to negotiate on the price based on the beams being rotten or something like that. You may actually have them fix it. There's a lot of different ways the outcome goes, but ultimately with that home inspection, it is what they call a contingency, and that allows you, the buyer, to have a way out of the deal or to have a way to negotiate the deal. So just remember that. And that brings us to the next question that's asked very commonly, which is, what is a contingency? A contingency is any sort of thing that you put into the contract that gives you the right to change the contract based on an action. So we have home inspection contingencies, mortgage contingencies, appraisal contingencies. Contingent says that this item is hinging upon that item. So meaning if I have a mortgage contingency, it says that I must get a mortgage or this contract is null and void. So that means that if you don't get the contract, because of the fact that you don't get the mortgage, you end up getting your deposit back. Without a mortgage contingency, if you fail to get the mortgage, then it wouldn't matter because you're already in a contract that's binding, mortgage or no mortgage. And that's the risk of doing a cash deal and not having the mortgage contingency, is if you don't actually have the cash present because you think in the future you're getting some gift from somebody or something like that, then you could end up in a big situation. So yes, contingencies end up making a deal look a little weaker on the offering. As far as a contingency-free offer is nice and clean and easy for a seller to accept, but at the end of the day, we need contingencies. And a lot of times, it does not make any sense, especially as a buyer that doesn't have a lot of cash or a buyer that's doing it for the first time, to decide to waive contingencies. It is a way to add power to your offer, but at the same time, it's a way to undermine your own power and authority and the ability to negotiate based on what actually goes on during the whole entire process. A lot of times, clients ask us about hiring an attorney. This is one of the places where I'll say, yes, you should hire an attorney. Even though I'm not allowed to voice my opinion on whether do or don't, I'll tell you that you should, because of the fact that it is 1,000 times more comfortable when you're spending hundreds of thousands of dollars to know it's going to go right and to know that every piece of paper is filled out on your side. And it's especially important when the other side has an attorney. I see all too often that somebody decides because the other side's attorney is willing to work with them to help them, that they're willing to take that because it's at a discounted rate. If the first person's paying more than you and they're paying the other side, I don't care how ethical and how moral you think that attorney is, I would question that you're getting fair service. So just make sure that you have someone that's working on your side, that's committed to you as a buyer, and that's going to look through everything. Sometimes you get lucky and you're working with a bank or a mortgage lender or a mortgage broker that actually provides free purchase and sale agreement review as well as closing. You can check in with your mortgage professional and ask about it. Don't tell them I told you, because they might be mad that you found out that sometimes people get it for free and other ones don't charge for it. One thing I will tell you, though, is if you look at the closing costs and everything, they say the word free, but ultimately it's almost like you're paying for it. It's just in another section of how you pay for it. So just make sure you check in with them just to make sure that you're not doing something that's redundant. Have you ever heard of the word MLS? It's used frequently in real estate. A lot of times people ask us, what is MLS? And it stands for Multiple Listing Services. So that's the online services that's commonly used by the group. Actually, Realty pretty much owns every single one of them. The MLS is where brokers and agents load properties. They load the properties into there, and then they're shared online. Back in the day, it was a little notebook that they added pages into as they went, and then each week they would update the pages. Nowadays, it's the online listings. MLS is not Zillow, but Zillow takes information from the MLS through something called IDX, which is Internet Data Exchange. So that overall is what MLS is. It's just really the entire grouping of properties and what's going on with them. A lot of times for us in the agent world or brokerage world, that's where we find out our compensation and also a lot of the hidden details. As you know, on Zillow, they don't hide details from you, the consumer, but the MLS, their strategy has always been to prevent the consumer from seeing all the info to drive you back to a real estate agent, whereas Zillow is really trying to drive you away from real estate agents and to give you all the information at your fingertips through the app. Whichever way you like it, at the end of the day, the MLS is something that's going to be around for a lot longer. Another common question asked to us is the difference between pre-qualification and pre-approval. These words sometimes used interchangeably, but most often a pre-qualification is a little bit before the pre-approval. The pre-qualification is when you're actually stating a lot of the income and different tax records, versus the pre-approval. A lot of times it means that you've actually got them to approve you based on giving them documentation. Not all companies take documentation for either one of them, and the reality is you can look at the bottom, and if you have things called conditions on your pre-approval or pre-qualification, it can actually weaken it. So sometimes it'll have a condition saying that they must verify all income or other things like that. You want to check those out. As agents, we always read the pre-approval letter and we look for as few conditions as possible. That way we know that the person's ready to go. But for the purposes of this, the best way to go is to get a pre-approval for buying a home. Often in the industry, we hear of something called title insurance. People are always asking us, what is title insurance? It seems like we can buy insurance for everything. Title insurance is something that protects the lender and the buyer against loss in case there's an issue. In the world, a lot of people think, once I own a property, I own it, and that there's nothing that can come up. But the thing is, as neighboring properties do title searches, and the world of internet just continues to grow, we're finding out that more and more titles, as they were passed hand to hand in written form, as well as kept into town halls and storage places, you find out that sometimes it's encroachments or easements or abutters that actually have conflicting interests in a property. The title insurance is going to cover you on that in case of loss of the property based on past things. In areas like Boston area and things like that where properties are very, very old, it's more common versus down south where properties are a little younger. One of the reasons for this is the different types of property measurements used. We use meets and bounds here, which is just a random plotting of a property, versus them using government survey. Government survey are all square lots, so when you have the edge of one lot meeting another lot and it's square, it's pretty easy to see where they actually connect. Whereas in Massachusetts area, it's really old, basically cowpath land where a stone wall would have delineated the edge line, and it was how it was built, and has all sorts of curves and hoops in it and different things like that, which means that quite commonly there are arguments about who owned where, and this is something that I would always suggest buying as title insurance. So title insurance, for the purpose of what is it? It is something that protects you from losing property when there is a conflict on the title, or it ends up paying out on that so that you are compensated for the loss of land that you have. Another question that's commonly asked to us is, what's the difference between a listing agent and a selling agent? A listing agent and seller's agent is commonly used on the actual MLS side, but in most of the terms we call it a listing agent and a buyer's agent. The listing agent actually works for the seller. The reason they call it the selling agent is it's the person who sold the property who would be the buyer's agent. So Just remove the word selling agent. You can call it a listing or seller's agent as one, or the other one, the buyer's agent. Get rid of the word selling from the other side of the transaction. It's just a confusing thing that you read somewhere. Sometimes you'll see it also in the banker and tradesman under the different information about property transfers. But for the purpose of this, a listing agent represents the seller in their best interest, and a buyer's agent represents the buyer in their best interest. The person listed on the sign out in front of a property, for all intents and purposes, is the listing agent. That's the person who owes it to the seller to get the most money and the best terms for them possible. A buyer's agent is any other agent that comes into the property with someone interested in purchasing the property and represents their best interest, looking to get it to them for the least amount of money possible and for the best terms to them available. For the purposes of understanding buying a home, you always want to work with a buyer's agent. You want your own representation so that that person works for you and looks out for your best interest, and you have that right. A buyer's agent in this state can show you any and all properties, and then they can actually work for you so that you're not going into a dual agency relationship where the agent works for both the seller and the buyer, and you're actually kind of losing out on representation because they really act more as a facilitator and pushing paperwork back and forth where they can't actually help you. That actually segues me right into the next question. Do I need to call the listing agent to get more information on the home? No. That's the last person you want to call. They work for the seller. You want to call an agent that you trust. I always tell people, you really want to set up with someone that you have a good trusting relationship with and that you're in good contact with. That way you can just call them up, tell them the property, and they're going to get you all the information. You can call them on their cell phone. Don't go on Zillow. Don't go on to all these other things thinking, I'm going to get all the information myself. Make sure you reach out to a good buyer's agent. Here at Movementum Realty, we have a lot of them available, so if you need somebody, just let me know, and I'd be happy to help you get that. This is the next part that's crazy about a buyer's agent and the fact that people don't use a buyer's agent. The cost of hiring a buyer's agent is actually none to you. A lot of times people think that it's going to cost them money, but the reality is it doesn't cost you money. The seller is paying that. Inside the contract that the seller uses, called the listing agreement, they agree to pay cooperating compensation to other agents who bring along the thing. Is this a conflict of interest to you? No. Even though they pay us, we have no agreement of fiduciary duty to them. It is just an offering to bring us somebody for the property to purchase. They're going to pay us. So that's the end of that. At the end of the day, the fact that you don't pay anybody and that they work for you and that they're going to work for your best interest, it makes it a no-brainer. Definitely have a buyer's agent. Once you get into the process of buying a home, you're going to hear a lot of different terms. One of the ones that you're going to hear is counteroffer. I get asked quite often, what is a counteroffer? A counteroffer is when you make an offer on a property and the person comes back to you denying that offer, but comes back to you with other terms. One of the things that's not really understood about counteroffers is the counteroffer actually cancels out the original offer. So if you made an offer of $400, they counter you at $410. You decide to say no, and then they say, okay, I'll take you $400. You're not obligated to that $400. You can work with that $400 if you decide to, but once you counter an offer, the original one is dead. So this means if you're on the buyer's side, you put in an offer of $400, they come back at $410, you say no $400, they no longer also have to sell it to you at $410. So whenever you're countering an offer, you really want to think about it, because if you counter it and you think you're just going to go back to where you were, you say, okay, no, I want $400, they say $410, you say no $405, they say no $415, and you go, what happened to $410? Too little, too late. You decided to negotiate too far. Where sellers really got to watch out for this is in a downturning market, and where buyers really got to watch out for this is in an upturning market. As a buyer, you turn somebody's offer down, and then suddenly the next thing you know, it's higher. So just be really careful when you're countering people's offer and really think about, is it worth renegotiating over $1,000 or $5,000? Yes, it's $1,000, and yes, it's $5,000, but divided across 30 years in your payment, it's going to be a very small number, and if it's what caused you to lose the home, it's going to be a very regretful decision. When you're actually purchasing a home and you're going through all these different processes, one of the other ones that comes up often is debt-to-income ratio. The debt-to-income ratio is when you take on the house, how much debt are you going to have versus how much income you're going to have. This is one that comes up during the pre-approval process. It also comes up in the process of buying a car and other things that you're financing. The debt-to-income ratio is something that you got to be careful of. This is why they say do not buy a car or max your credit cards out or any of these other things during the time where you're going to be buying a home, because the bank is judging your debt-to-income ratio to actually equate out how much you can spend. And just because you have a pre-approval letter does not mean you're pre-approved when you change your side of the agreement, meaning you decide to buy a new car after you get that pre-approval because you already have the pre-approval in hand. So for the purposes of buying a home, hold off on any major purchases, hold off on any major things. And here's one that most people wouldn't know. Even a new gym membership, that's $100 a month. That's on your debt to credit income ratio. These are things that are publicly reported most often because they're credit. And when you do that and you decide that you need a new couch and you Sleepy's has a great deal on, you don't have to pay for 6 months. Well, guess what? When they pull your credit, you're going to see that. And it's another $60 or $100 a month that you've pulled out of your own thing. And $100 a month is actually a lot of money when it comes to a mortgage of how much you're going to not qualify for. So when you're looking to buy a home and you're working with a mortgage broker and you're in the process, don't go buying anything spending money-wise without talking to your mortgage professional first. Always consult with them. They won't mind or think you're crazy. They'll think that you're considerate for reaching out to them ahead of messing up the deal. So let's talk about the last most common question. Why should I use an agent? Why shouldn't I just go reach out to the seller and talk to them direct? I'm going to save a bunch of money. Let me ask you a question. Have you ever accepted less money for an item? The truth is no. Nobody accepts less money for an item. Just because you don't use an agent, all it tells the seller is that they're going to make more money off you. It doesn't tell them that they're going to do anything other than that. And at the end of the day, most sellers understand that if you're not working with an agent and they have an offer with an agent versus one without an agent, it's going to be a lot more complex and it has a lot more high risk of it falling apart because you don't know what you're doing. So at the end of the day, a lot of times people think it means that they're going to make more money, but the reality is it means that they're going to take on more risk. And most sellers understand that unless they actually get physically more money, meaning instead of $300 they get $320, they're not going to end up with more of the money, because most of the time if they have an agent on their side, it's going to end up in what's called dual agency, which means they're going to pay both commissions to the one agent involved. They're not often going to get any sort of discount from the agent because they're taking care of both sides, because whether you both use an agent, different agent, or you both use the same agent, there's pretty much the same amount of work involved, so that means that the other agent gets paid twice as much money. The other thing about going out on your own and doing these things is you can get yourself in a whole bind because you don't know which contingencies to use, what paperwork to use, what dates need to be followed, what you do versus what the seller does. So the reality is, whether you're buying or selling a home, the best way to do it, the way to get the most money, the way to save yourself the most money, the way to save yourself the most headache and guarantee a smooth transaction is to work with a real estate professional. If you're looking for a real estate professional to work with, feel free to reach out to us here at Movementum Realty. We'd love to help you out. We have a lot of agents on duty that are ready to help you at any given time. We work 24 hours a day, 7 days a week, and we look forward to helping you. Thanks for listening to this week's podcast. Tune in next week. If you have any questions, feel free to DM me, PM me, text me, call me, email me, any of the forms of communication that works for you. If you have any suggestions for the show in the future coming up or any questions that you want on the show, feel free to let me know those and make sure to follow the podcast. Thanks again and have a great day.